Welcome back to Investing Talk podcast. You sent us some info on GRI Bio, and we're going to take a look at GRI. Try to understand what all this recent activity is about and what their potential might be. So our mission here is to unpack these reports and give you some clear insights. We'll explore their financials a little bit, the science, the buzz, all that. So GRI Bio is a clinical stage biopharmaceutical company. And what's interesting here is their focus on developing new therapies that target natural killer T cells, NKT cells for short. And you can think of these NKT cells as like a specific type of immune cell that can sometimes overreact and cause inflammation.
Right, yeah, and what I think is so interesting here is they're really trying to target these NKT cells to address a whole bunch of different conditions: inflammatory diseases, fibrotic diseases, and autoimmune diseases. So that kind of broad potential is really exciting, but it also comes with its own unique challenges.
For sure, and I think you hit the nail on the head there. It's definitely a challenge. And their lead program, the one that's getting a lot of the attention, is GRI 0621. And that is designed to inhibit a particular NKT cells, the iNKT cells. And their initial focus with this therapy is IPF, or idiopathic pulmonary fibrosis. And IPF is really serious lung disease. And it's where the lungs become scarred.
Yeah.
And over time, it gets worse. Unfortunately, there are not a lot of great treatment options out there.
Yeah, thinking about the bigger picture here, it's really interesting that they're going after IPF with GRI 0621. And it seems like a pretty strategic move because they're trying to tackle this area where there's a lot of unmet medical need. Existing treatments for IPF, oftentimes they only slow the progression of the disease. So a therapy that can really address, that underlying inflammation that's driven by these iNKT cells, that could be a really big deal.
Yeah, it definitely speaks to the potential impact that it could have. Now, beyond GRI 0621, they're also developing what are called type 2 diverse NKT agonists. And that sounds a little bit more complex. Could you break that down for us a little bit?
So this really gets at their overall approach, you see. With GRI 0621, it's kind of like putting the brakes on these overactive immune cells. But with these agonists, they're trying to stimulate a different subset of NKT cells. So the initial condition that they're looking at with this approach is SLE, or systemic lupus erythematosus, which is another really complex autoimmune disorder where your body's immune system is attacking its own tissues. So it shows that they're exploring all these different ways to fine-tune the immune response using NKT cells.
So they're not putting all their eggs in one basket.
Yeah.
Which makes sense, given all the challenges inherent in drug development. And it looks like they've got a pretty good foundation here. Over 500 proprietary compounds in their library.
Yeah, that's a lot of potential starting points for future therapies. That really shows a significant investment in all that early stage research. Gives them a lot of flexibility to go after a bunch of different targets, and they can adapt if something isn't working.
Yeah, for sure. So let's talk about their stock performance. It sounds like it's been quite a ride for GRI. We're seeing a pretty significant jump here, 114% in one day. Back on April 1st, 2025, what do you think it led to that surge?
It seems like there are a couple things that happened all at the same time. One thing was the company reaching compliance with Nasdaq's minimum bid price rule. So for a listed company, meeting those requirements can really signal stability. It can reduce the risk of delisting, which can make investors nervous.
Yeah, we've definitely seen that happen, where there's a concern about a stock getting delisted. And it really shakes investor confidence. So it sounds like they cleared that hurdle, removed some uncertainty there. But the reports also mention positive developments in their clinical trials as contributing to this increase as well. Were there any specific results announced around that time?
From the info that we have, it doesn't look like there were specific clinical trial results released on April 1st. But it does say that positive progress in their clinical programs has really been driving these stock fluctuations. So it's possible that there was some previously released positive data that gained traction.
That would make sense.
Yeah.
And, when you look at their stock price over the past 6 months, there's a lot of volatility. There was another notable increase in November 2024, and that was due to some positive preclinical data for GRI 0621. And just for everyone listening, when we say preclinical, we're talking about studies that were done, in a lab and with animals before they actually start testing in humans.
Yeah, and positive preclinical data is definitely encouraging. It kind of suggests that, the therapy shows some promise based on these early studies, and the market tends to react to that early potential. But it's super important to remember, a lot of drugs look promising in the preclinical stage, and then they don't succeed in those human trials.
So it's really important to keep that perspective.
Absolutely. And, looking at the whole past year, the stock's been up and down quite a bit. driven by these clinical developments, but also what's described as financial restructuring. What might that involve in this context?
So financial restructuring basically means they're doing things to improve their financial health. And in GRI Bio's case, a big part of that was this 1-for-17 reverse stock split back in February 2025.
Right, so if you had like 17 shares of the stock
Yeah.
before the split, at a lower price. After the split, you have one share at a price 17 times higher. Companies do this sometimes to increase their share price, meet those exchange listing requirements, exactly like that Nasdaq minimum we were talking about. So it's basically just adjusting the share price.
Yeah.
It doesn't actually change the value of the company. It's more like a financial maneuver to meet those criteria.
Interesting. And all this stock activity ties into this announcement on April 1st. About a $5 million public offering. Yeah. For a company at this stage, $5 million, that's a lot of capital.
Yeah, it's a pretty common way for biopharmaceutical companies that are in this clinical stage to raise money so they can keep going with their research and development. And this particular offering had common stock and warrants. And you can think of a warrant like a coupon. You know, it lets you buy the company's stock at a certain price later on.
Got it. So it sounds like this $5 million is meant to fuel their ongoing product development.
Yeah, and cover all their operational costs.
Yeah, like salaries and day-to-day expenses. But it's interesting that they did this offering when the stock price was going up, and they were getting compliant with Nasdaq. It kind of makes me think that they were in a better position to negotiate the terms because investors were more confident. That's a good point. So let's take a look at their financials a little bit more formally. So the reports show that GRI Bio doesn't have a lot of revenue, which, isn't really a surprise for a company that's mostly focused on research and development. But they did receive $13.9 million from warrant exercises in 2024. How does that work?
Well, when those warrants are exercised, the holders convert those options into shares by paying the predetermined price. So it gives GRI Bio that cash infusion. It's not really revenue from selling a product.
Yeah.
But it's capital that they raise through these equity-linked securities.
Okay, so not revenue, but still a cash infusion.
Exactly. And for the year ended December 31st, 2024, they reported a net loss of $8.2 million. For a biotech company that doesn't have any approved drugs on the market yet, that's probably pretty expected.
Yeah, you got to spend a lot of money on research. Most of what they're spending is going into research and development, preclinical work, clinical trials, all the people that are involved in that. So that net loss, it's really just a reflection of those investments that they're making. Makes sense. Now, EPS, or earnings per share, it's not really specified here, which makes sense given they have a net loss. But they do have a very low long-term debt-to-capital ratio at 0.02. And that suggests that they haven't had to take on a lot of debt to finance their operations.
Right, it shows they haven't relied on borrowing, which is a good thing, especially for a company that isn't making money yet.
Yeah, it seems like a positive sign of how they're managing their finances. Now, their free cash flow is negative, which makes sense given they're so focused on R&D. They had about $5 million in cash equivalents at the end of 2024. And they're saying that's supposed to fund their operations into Q2 of this year. That doesn't seem like a very long runway.
Yeah, this is a really important thing to keep in mind. Biotech research is really expensive, and they're probably going to need to find more funding to keep going with their clinical programs. This public offering will help, but it's definitely something to watch.
Absolutely. All right, so let's talk about their clinical development efforts. They're currently running a phase 2A study of GRI 0621 for IPF. So what is a phase 2A study supposed to do?
Well, a phase 2A study is usually designed to assess the safety and how well the drug is tolerated. In a small group of patients with the disease, it can also give you some initial data on whether the drug is doing anything, and it can help them figure out the dosage for later studies. And this study in particular is also looking at biomarkers.
So biomarkers, so they're looking for these measurable biological indicators that show that the drug is actually doing what it's supposed to, even if they don't see improvement in the patients yet.
Exactly. This can give you some really good insight into how the drug works and help them predict whether it'll be successful. And they're expecting some interim data from the biomarker portion of the study in the second quarter. That's a big milestone coming up.
Yeah, for sure. And the full results from the phase 2A study, that's expected in Q3. Those results could be a big turning point for the company.
Yeah, there are definitely important upcoming events. If the data is positive, it could really increase investor confidence, maybe attract more investment, or collaborations with other companies. But if it's negative or inconclusive, it could hurt them.
So there's a lot riding on those results.
Yeah.
Okay, so let's think about the competition. The biopharmaceutical industry, that's obviously super competitive. Who are they up against in the autoimmune and fibrotic disease areas?
So they're up against companies like Galapagos, NV, Pfizer, these are big organizations. They have a lot of resources, and they already have treatments for some of these conditions.
So GRI is a much smaller company. What do you think makes them stand out?
I think their main advantage is this new way of targeting NKT cells. There are other companies developing therapies for these diseases, but GRI Bio is focusing on this specific cell type, and that could give them a real edge, their pipeline, especially GRI 0621. That's their big thing.
And they're protecting their approach with patents, a recent one in Japan for their NKT cell modulators. That intellectual property could be really valuable.
Yeah, patents are super important in biotech. It gives them the exclusive rights to their work, and it can be a big deal when they're trying to partner with other companies, or even if they get bought out by another company.
Makes sense. So obviously there are also some risks here. Regulatory challenges are a big one. The FDA approval process, that's super complex.
Yeah, that's a challenge for anyone who's developing a drug. You have to show the FDA that the drug is safe and that it works. And that means lots of trials, and it can be a long and expensive process.
And speaking of expensive, drug development itself costs a lot. These trials are a huge financial investment.
Absolutely. From the early research to those different phases of testing, it adds up fast, so it's really important that they can keep getting money.
And that leads to another risk, the need for additional financing.
Mm-hmm.
And it's uncertain whether they'll be able to get it. It sounds like they're probably going to need more capital to keep things moving.
Yeah, they could get it in a few ways. More public offerings, private investments, maybe even some collaborations with bigger pharmaceutical companies.
And we talked about them having trouble with Nasdaq compliance. And that just highlights the financial pressure that they're under.
Yeah, staying listed on the stock exchange is so important. And the reverse stock split, that was a way to address that. But they need their stock to perform well over time, to stay compliant.
Right. And then, of course, there's the risk that comes with any clinical trial. What if their drug candidates don't do well? What if they don't show positive results? That could really hurt their stock price.
Yeah, the results of this phase 2A trial for IPF, those are really important. Positive data could change everything. But negative data, that could force them to rethink their strategy.
So high stakes, for sure. And it's worth pointing out that they have a history of losses. And they need external financing to fund their operations, which isn't uncommon for a company at this stage.
But it is still a risk. And finally, their stock price. It's been all over the place.
Yeah, biotech stocks can be really volatile, especially when the companies are still developing drugs and not making revenue yet. It's just the nature of the beast.
So a lot of risk here, but also some potential upside. If the clinical trials are successful, that would be huge. Yeah, if they can prove to everyone that these drugs are safe and effective, that will really validate all their hard work. And it'll make them more attractive to investors and potential partners.
And they have that strong portfolio of intellectual property with those recent patent grants.
Yeah, those patents are a big advantage. It keeps their work from being copied. Really important in this industry.
For sure. And there's a big need for new treatments for diseases like IPF. If GRI 0621 works, they could really capture a big part of that market.
Yeah, a lot of people need new options for those fibrotic diseases. And if GRI can provide something better, they have a real opportunity.
And we've seen a positive reaction from the market. Their stock went up after they got compliant with Nasdaq. And there are some positive signals. It seems like investors are optimistic.
Yeah, investor sentiment can be a big driver, especially in biotech. So this reaction shows that people are paying attention and they're interested.
Okay, so last thing. What are analysts and investors saying?
It seems like there's some optimism, but they're also being careful. Everyone's interested in their scientific approach. But there's also some skepticism about whether this stock price is going to last.
So a healthy dose of skepticism, which is probably a good thing.
Yeah, the early data is exciting, but there's still a lot of risk. And their financial situation isn't perfect, so it's natural for people to be cautious.
So big picture, GRI Bio. It's a really interesting situation. They're in a high-stakes area of biotech. They've got a novel approach and some promising early signs. But the clinical trial data, that's going to be crucial. And their financials, those need to be watched carefully. We hope this has given you a better understanding of what's going on based on the information you provided us. As always, this isn't financial advice, just our way of unpacking the information. So if you found this helpful and want us to explore other companies or other topics, be sure to subscribe, like, and comment below. We're always looking for new stuff to dig into with you.
One last thought. If GRI Bio's idea of targeting NKT cells works, it could have a big impact, not just for IPF and SLE, but for a lot of inflammatory and autoimmune conditions. It could change everything about how we treat these diseases.